You're tuned in to Agriculture Today, and we start our Friday show with a grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off our grain market conversation, what are we seeing for futures?
Well, a lot of pessimism. There's no real weather challenges yet that have come into play. Now, I understand from talking with our K-State climatologist and segments that'll air later. Still, uh, still the likelihood of one of as we trans of hotter, drier weather as you transition into summer. That may be several weeks away, et cetera. So still uncertainty with regard to where things would go. But right now we've got adequate rain, and here it is, just about June 1st. And we've looked back in history, and when you see we have adequate moisture, the crops planted, no real worries and concerns. It's common historically to go sideways, and in terms of the level of prices, especially for spring planted, fall harvested crops, corn, sorghum, soybeans, and then to not see a lot of movement to the high side. Most of the shouting is still ahead of us in terms of what happens in June and July and August. And historically of late, if we don't end up and have major crop problems, the lows that we have been seeing have been coming actually in September, and the futures right now reflect that. And see on yesterday's closes, the September contract at 427 and a quarter. That's less than the July contract at 447, actually less than the D's contract at 441. So clearly, in the corn market, they're looking towards September as a low, and that's just anticipating that gracious. That's anticipating a normal crop and no real challenges coming forward. Not quite the same story for soybeans. Still, that September contract closed yesterday at $10.30. November about 7 cents higher, 10.37. August 10.48. July 10.51. So again, September seems to be the target time frame where if we do have normal crops coming in and no real challenges that we see lower numbers. And that September date also coincides with the USDA's release of their September crop production report and their associated World Ag Supply Demand Estimates report, i.e. the WASDE. And that's the first report where USDA and NASC actually, along with surveying farmers, which begins in the August report, they actually themselves get out into the fields, do their test plots. They call it their enumerated surveys at that time. And if there aren't any problems that have shown up, then yeah, the market tends to take that hard data or harder data, quantified numbers out of the USDA, and tends to look pretty negatively towards things. Of course, that's talking about spring planted crops and what harvested in the fall, but yet for wheat, here as we're setting today, gosh, it's again almost June 1 harvest. It will be I don't know if it won't be completed 1 month from now, but we get to July 1, we'll have the first part of harvest pretty well hit at, unless we get major delays from a lot of rain or something like that. But but uh, but the anticipation would be that we'll have a pretty good idea of where the harvest is going by the time we get 4 weeks out from now. By the time we're 6 to 7 weeks out, unless again rains come or whatever delays things, we'll have the harvest pretty well done. So you look at July futures now with that anticipation. July 25 closed yesterday $5.31. You look historically when we've had higher prices, strong exports, things happening in the world, $6 and $7, $8 without even blinking almost. But we're at 531 at this time, and you do see carry in the market. Kind of surprising carry from 531 in July for the Kansas hard red winter wheat. The Kansas they call it the Kansas wheat crop. It's traded on the CME, but CME Kansas hard red winter wheat futures from 531 in July, 545 and three quarters in September, D's to 567, March 586, 597 and a quarter in May, and then $6. Again, rising prices all the way out to July of 26, $6.04, just under 605. And depending how you look at that, that's either great optimism for the future or more so a signal to store wheat. And that's telling farmers to either store on farm, to store commercially. It's a boon, that type of 6 and 7 cents per bushel storage to commercial storers that would hold wheat. So that bodes well for the grain elevator industry, that they'd have some hedging opportunities, but we have to get the crop in first to get to that. So anyway, got that type of situation happening, and if I can, I'll just take that right over into cash market. Cash prices, uh, really now we're back to time frames of that we were in prior to uh, well prior to the run up in prices that happened with the Ukraine-Russia war back in 2022 or thereabouts. So now the top price in the state of Kansas for corn, cash price, $4.47 in Garden City, even money basis. We've been at that for a while, and you've got a range of prices: 407 on the low side, 417, and that'd be around Salina being offered. At least that's the highest price that we had seen yesterday for well, pardon me, for yesterday's highs. And then Colby 417, Pittsburgh 417, Hutchinson 417, 427 Topeka. So, that's not 527. And it really, the 417, 427s, 447s, they're covering all direct costs. In a lot of cases, if we get good yields, they're covering machinery, but land ownership really not land ownership and family living costs really are challenged at those levels, given what's happened in inflation and cost. And just quickly, grain sorghum prices, the lower cost of production for the most part. Uh, Highest price 372 again in the Garden City area, 75 under basis, and then you have 367 in Topeka, Hutchinson, 357 Salina, Pittsburgh, and Colby. So kind of uniform in terms of the high price. I would say for soybeans, uh, we have one price that really stands out in the Topeka area at 1041, and 1007 at Hutchinson, Pittsburgh, and then Garden City, Salina, Colby, all below 10. And finally, the biggest issue that's right in front of us again, as we talked about with for the futures prices, the cash wheat harvest has price offerings of 512 as a top in Salina, Topeka, Hutchinson, and then elsewhere 462, 467 in Garden City and Colby, Pittsburgh 473. So again, I think when we look at our K-State cost of production budgets, when we're in the central part of the state where we don't have fallow periods involved, then these prices are they're doing a good job of covering all the direct costs and probably also machinery. But again, if you're paying for land, if you have higher cash rent versus ownership or a crop share situation, makes all the difference in terms of whether you're making a lot of money at those prices for wheat. And of course, high yields. If we're gonna have low prices, man, hope we have high yields because that helps to keep the cost per unit down, and it helps us to go forth pretty well.
And you recently talked with Kansas Farm Bureau's Mark Nelson on a webinar discussing some different likelihoods of outcomes for corn, wheat, and soybeans. So, could you give us a brief overview of what was discussed?
Yeah, we looked at corn, and basically, uh, with the USDA's current projection of about 181 bushels an acre, 15.8 billion bushels of production this year. Again, strong crop, record high yields. You have a stocks to use figure of about 11.6%. They're projecting prices at 420. Right now, that's about a 35% chance that that's right, because we've got all of June, all of July, and all of August to work through yet, and weather forecasts that are are raising some concerns about hotter, drier weather later on. So uh, probably more likely, by my own judgment, like a 40% chance of something like it's 179 bushels per acre on the same acreage, same usage, and a price closer to like $4.60 per bushel for this upcoming 25-26 marketing year. And actually, when you look at the futures, they they're projecting just about that. Now they're down some today, but they're 455, 460, as opposed to the USDA's 420 projection. So we'll see where that goes. For soybeans, you're looking at a situation where with the cutback in acres, uh, we take what the USDA is projecting at 52 and a half bushels an acre, record high by about 3/4 of a bushel, never been there before. And if uh, we're frankly in a riskier situation if in terms of coming upon a tight supply demand outcome. About a 30% chance USDA is right. Projection of 1025 price at about 6.7% stocks to use, 52.5 bushels on these acres. Probably about, by my own thinking, about 30% chance that's right. 40% chance, more so, of something like 51 bushels an acre. That's more in line to where we've been of late. And just that change alone uh, brings into play rationing to start. You have to cut back 20, 40 million bushels of both exports and domestic crush just to keep things from getting too tight. So if we just go to 51 bushels an acre, you're down with some rationing, you're down to about 230, 250 million bushels. 5% stocks to use instead of 1125, about 1150. Pardon me, instead of 1025, about 1150. Shelby, you can say, "Gosh, I talked to that K-State guy, and he's got a contrarian opinion on the soybean market. There's some risk in the soybean market yet that can still come into play, especially if hotter, drier weather comes in July and August, and so we'll see. And then for wheat to finish up, really, um, the overall pessimism of the wheat market is pretty hard to ignore right now, and we're just so hampered by poorer exports. That's the defining issue. Food use very good, but exports at 800 million bushels instead of 900 or 900 million or 1 billion bushels really puts us at a ending stocks figures at 950 to a billion bushels, and gives us prices closer to 530, 520, $5. There's a chance, of course, of exports really moving more strongly because of problems overseas. We get to $6, but right now you're in more of a situation where we're coming into harvest and looking for something to change from our current situation.
Dan, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.